Bitcoin Cash continues to pull back. We've broken a lot of major supports, and on this linear 2-hour chart, you can see a lot of these red lines were some support resistance levels, and we've broken through most of them. And truth be told, this looks complete on the linear chart. If you'd like to take a closer look at these charts, I'm going to post some links in the description below. But we have enough in place that we might be done. There's some signs that we may be turning on very soon. And as long as we maintain that 261 support, we should be just fine. However, on our longer term chart, this is the logarithmic 4-hour chart, things look a little bit different. I've actually added a third pattern, a purple pattern. That will be our second alternative. So before I go into that, I'm going to explain the green primary pattern that is still primary. And in this situation, if you remember, we had a double zigzag formation. That was supposed to be our whole fourth wave. Since our May 2021 top, well, since we have what looks to be 5 waves down in an ending diagonal, that's why we have these channels drawn as such. It does make this qualify as just a conventional ABC wave because, again, this wouldn't be a zigzag. So therefore, I have relabeled the green pattern to show that we have a conventional A, B, and a C in a typical zigzag manner. So we have reached down low enough for this to be complete. We actually hit a significant fib, 0.764 extension of this larger drop from May. So that is the green pattern. If that's the case, we would need to see some upward action real quick. Preferably, you have a very strong 5-wave impulse straight up, followed by a 3-wave correction back. So that is a potential there. So it's my primary. The red pattern is, of course, still there. I'm really not sure where I sit with that. It's really close to 50-50 between the green and the red at the moment. And that is because while in Bitcoin Cash, things are looking like they look complete enough for us to be done with our correction. It's not the case in other cryptocurrencies. Bitcoin and Ethereum look like they have more room to the downside. So our red alternate pattern is that we would see a corrective bounce with a 3-wave bounce like so, which would be the second wave. And of course, I mentioned that would be the gentleman's exit. So if you haven't exited your positions yet, that would be a good time to do it. Full disclaimer here, I have exited all my short-term and intermediate-term crypto trading positions just because based on my criteria, just following my plan, I was planning to get out and get back in if I see a more bullish development. So of course, you should have your own trading plan if you plan to hold through the whole correction. I do still believe we're in a crypto bull market over the longer term, and well, may see some rough seas before that point. At any rate, the red pattern is, like I said, really a close second place. The third pattern that I've added is this purple pattern, and it's an ending diagonal kind of pattern, and that is, it would make sense because when we look at this correction, beginning of the correction from the top of our B wave, this looks like a 3-wave correction down for our first wave, and in an ending diagonal within your subwaves, each subwave will have a 3-wave structure. So that could be a first wave, maybe have a quick 3-wave second wave up, pretty sharp pullback, and then we may be in the middle of our third wave, which isn't done yet. You might see a little wiggle back up and then a completion to this third wave. If we did see something like that, we'd go down as far as 219 to 180 for that third wave down, see a sharp retrace back up to support into that 360 range, and then our final fifth wave to finish the diagonal would take us as far down as 131, 116, somewhere in that range. It'd be quite devastating, but not as devastating as the red wave, because in the case of the red wave, we're looking at this entire correction as the first wave of 5. So that day could take us all the way down to $73, which is basically a major support. And when I say major, it is major across several years. That is the low that we hit in the March of 2020, right around, it would actually break that low. So that would be about where the third wave would hit. And if we had a longer fifth wave down, it would be even more devastating than that. I don't see the red pattern being too likely right now, but it is definitely in the back of my mind.